Hey everybody, John Gibson, Flagstar, Vice President of TPO.
Hello everyone, Jason Lee, Executive Vice President of Capital Markets for Flagstar Bank.
So kind of give me your viewpoint in the current market conditions and what we're seeing.
Yeah, I mean, I thought I had saw everything, right?
Right.
So never doubt this business, right? So every day is a challenge. Yeah, so I think we're seeing the culmination of a lot of things happening at once, right? I mean, I don't know if you want to call it a black swan event or what the name would be, but with a pandemic, we have a war going on. We have inflation that was allegedly transitory, but now it's not. Now we all agree it's not, right?
Yeah.
We have a Fed that's telling us they're going to raise rates multiple times throughout the year. So, you know, you have about as best of a crystal ball for rates going up that you've ever had, really,
ever.
Right?
Line of sight to what they're going to do, ever. So put it in perspective of us at Flagstar. All that volatility, I don't want to call it uncertainty, but you can kind of call it uncertainty, right? Like you said earlier, we probably have the biggest insight to what we know rates are going to do that we've probably had in our careers. But there's still a lot of uncertainty. And you talk about M&A, and you talk about liquidity, and you talk about all those other different issues. I think it's more important than ever as on the other end as a business partner on who you're actually doing business with. You mentioned, right? Do I need to hedge? Should I be best efforts? Or going down the path of going best efforts because I know I'm working with that company. In essence, I'm taking care of all that on the back end for you, and you just need to deliver.
We take the risk.
We take the risk, right? When you deliver a loan, we take the risk. In your viewpoint, as you look forward with the uncertainty and volatility that this year is certainly going to play, why do you think working with somebody like Flagstar, the institution that we are, the bank that we are, is important for an individual moving forward?
Yeah, I think we're, not to use the term that's kind of, used all the time, but we're a one-stop shop. We can provide you a warehouse line. We can finance your MSRs. We can buy your loans in a quick fashion. We can buy in best efforts. We can bid in bulk. We have non-agency products. We have portfolio products that we invest in, from the bank point of view.
Yep.
On the community bank side, we can kind of vertically, horizontally integrate however you kind of view that from your standpoint and the strategy you want to run your business. In the next, 2 to 4 years when we get through this, we can help you. If you want to come back down to be a broker, you want to go back up into correspondent, we can help you and guide you along that way and help you with that strategy to be successful.
One else I think too, and I'd love to get your viewpoint on this, right? In the past, there was, and we know this, right? There was, over the last 2 years, there was a monetization that took place to take companies public. But I think it's one of the things we've always said at Flagstar, right? 30-year commitment to mortgage, been in the space forever. Yeah. But not forget about that part of it for a second. It's also the financial stability that comes along with it. Open book, publicly traded. Yep. From a liquidity standpoint, I know during what you mentioned earlier, right? The 4 trillion plus markets, there were some crunches, out there in the marketplace from just simply margin calls, right? Yeah. And liquidity and being able to run the business. Where do you see that as a strength in having Flagstar as your business partner?
I think that's a huge point, John. With the bank, we have deep liquidity, access to liquidity. We're not a forced seller, right? So great example is the private label securitization market, right?
That's right.
RMBS.
Yep.
When it's around, we take advantage of it. We can securitize privately. When it's not, we don't have to, right? So I can either put loans in our portfolio, sell them to Fannie Freddie, Ginnie Mae, maybe a whole loan buyer.
Right.
I have multiple levers all in the same system, and throughout the day or throughout the week, we're watching those assets and where to kind of put them and place them. So I'm not going to have to go out and be forced to sell loans at a loss or securitize at a loss, I guess. So we can sit on the sidelines and wait. We have that liquidity. We have the depth of the bank that backs us up. And when we have these periods of cycle where mortgage goes down, dips into the trough,
that's right.
The bank is rising, right? And so we have a really nice scale.
It's almost like a natural hedge.
A natural hedge, right? So rates are going up. The bank is doing well. Mortgages, we're
challenged. We're fighting.
We crested the peak of the roller coaster. We're heading into the trough, right?
Yep.
And then we'll come back. And we have this natural organic hedge on our platform between the community bank and the mortgage company.
That's right. And you touched on one thing that would probably be the last question, and then we can kind of wrap up. But the private label security market, RMBS, obviously it's somewhat cooled off. But I know we filled a void for a lot of business partners last year, right? And with regards to non-owner occupied kind of transactions that were out there. Talk to that a little bit, just from a standpoint of what we did during that time period and what we were able to provide for our business partners.
We've been an issue for years, so we've got some pretty deep ties with the investment community and the Wall Street folks. So we have a platform that can literally, flip of a switch. Wednesday we come in and there's an opportunity, we flip the switch. And I come to you and say, hey John, I want to buy every single investment property loan I can, because I got a feeling this is going to work. We've priced it out. We've talked to end buyers, insurance companies, pension funds, foreign countries.
Yep.
They all invest in our bonds. So we were able to act very quickly on that last year. And that's, I think, kind of a shining light on our ability of our platform to turn on a dime quickly. And we issued 2 deals before anybody issued one. And we also issued the only 15-year investment property last year, right? So all in all, third quarter we came in second behind JP. For the year we came in third.
Right.
So, a mid-sized bank out of Detroit playing with the big boys like JP
right.
and Goldman, it was pretty fun. And we have a good relationship with those guys too. So it's actually a really good community with the investment bankers. We all want that private label securitization platform to work, right? And so we're all kind of working together and sharing ideas, within reason of what we can, to make sure that JP can issue. They're going to always issue. They're a big issuer, but they want to see us succeed. We want to see everybody succeed in that area because things change. I mean, look at we're still not on a Fannie Freddie in the conservatory, right?
Yeah.
I mean, who knows when that's going to happen? There could be more changes coming down from FHFA with Fannie Freddie. So more and more things could go private label or private market, and we're ready. We're built to do that. So
yeah, I mean, last year was a perfect example, right? When the agencies pulled the strategy that they did on the non-owner occupied space specifically, it left a void in the marketplace for that transaction, but business partners that worked with us didn't skip a beat. Matter of fact, they actually probably doubled down because they were actually one of the only people that had an outlet for that type of transaction, so it probably increased their volume. But that's the strength, stability of dealing with a Flagstar, bank from a standpoint of being in this space. Think about it, in especially in the broker space, we're like one of 2 banks that still exist. And
yeah,
I could make an argument. One of them was through an acquisition. This one's been through natural growth and a progression over 30 plus years.
Yeah, that's true. Never left.
Yeah, exactly. Always been committed to it. So hey, I got one more question for you. We're talking a lot about what's happened and obviously continued volatility. As the year shakes out, what do you kind of envision from your perspective, from a marketplace perspective?
I think it's more of the same. I think we're going to see volatility throughout. It's hard to say. Third quarter, fourth quarter. Depending on what you read or what economists you follow, recession could be 18 to 24 months away. We're going to see more Fed raises here. The next one probably it's 98%, 50 bips at this point.
That's right. Yeah.
So that prime rate's going to keep climbing, that low end's going to keep climbing, and the curve is flat. So I think we got a good chance to push towards 6%. 10-year somewhere in the 3 handle-ish, 3.25, 3.5. The purchase market actually MBA pushed it up a little bit. I think 1.72 trillion.
1.77 from 1.72.
Yeah. So we're in a healthy purchase market. And at the end of the day, there's still going to be household formation, right? Life happens, life events. People get married, they get divorced, they want to downsize, upsize.
Yep.
We've been so far removed from a normal market. It's kind of hard to wrap your head around a 6% note rate. So, but we're there. We're going to be there, and that's going to be the new norm for a while. So we just got to help each other out and help our partners get there.
Well, and I think it's a lot of valuable information for anybody who's seeing this, whether you're in capital markets or not, because to your point, there's a whole generation of people that have come into this industry that all they know is rates at 3.25 or below. They've never been in an environment where we're about to probably be in for the next 18 to 24 months in all intents and purposes. So, but guess what? They're predicting at 2.6, 2.7 trillion, depending on MBA, Fannie, Freddie. That's still a healthy mortgage market. It's just not going to be so dominated by refinance. It's going to be dominated by purchase. And 6% shouldn't scare anybody from a purchase perspective.
That's right.
Well, awesome, man. Hey, I appreciate it. Obviously, there's a lot of uncertainty going on in the marketplace. So to have you come on board, I know we've worked with each other for a while, but to have you come on and give some insights in regards to kind of how we got here, what the future looks like, and what you should be looking at. I certainly appreciate it.
Yeah, thank you. No, it's been fun.
Awesome. So, hey guys, Jason Lee, EVP of Capital Markets at Flagstar, with some words of wisdom for you, both why we're in the position and then what you can do to hedge yourself, quote unquote, going forward. So, appreciate the time.